So Google stock is having a big dip in pre-market, and today we're going to look at what's causing that big dip and is this a buying opportunity for Google stock. And as well as that, we'll take a look at Microsoft's earnings as well. So I hope you enjoyed the video. Let's get started. So Google stock is having a big dip in pre-market after reporting earnings last night. The stock is down 5% in pre-market, and this all comes from Google's earnings, which we'll take a look at in a second. Now, I am a Google shareholder. I've been a Google shareholder since about 2022, when the stock seemed to have a massive dip from 2021. It's very rare that you seem to see Google or these big techs on a 40% dip, but we got that in 2022 and I decided to buy shares. I actually wanted Google to be my largest position in the portfolio. If I could only own one stock and have all of my portfolio in one stock, it probably would be Google. The moat that this company has and the balance sheet it has is one of the best in the world, which says a lot, and the confidence I have in Google. So I was buying a lot of Google shares in the $100 range, $90 range, $80 range, and I was actually trying to make that stock my largest position. Now, I wasn't able to do it because the stock went absolutely ballistic, and I am now up over 40% on that stock. However, as we look in pre-market today, the stock is having a dip after the earnings. Now, we'll take a look at the earnings, and if you have a look at the numbers, EPS came in at $1.64, beating the estimates by $1.59. Very good. Revenue came in at $86.31 billion, that compared to the estimate of $85.33 billion, so good numbers on the revenue. Google Cloud, which is a number that everyone seems to focus on when it comes to Google, at the moment, that's what caused the dip last time in Google earnings, came in at $9.19 billion versus $8.94 billion expected. Once again, very good numbers from Google Cloud. YouTube ads came in very strong as well. A little bit below the expectations, which is what everyone's suddenly focusing on, I think, at the moment. Traffic acquisition costs as well came a little bit under. So, not really much of a shock there. Mainly when you look at the EPS and revenue numbers, they were better than what was expected. So, you would think that this is a really good quarter from Google. And seeing sales go up 13% is the best growth I've seen them do for a long time. In fact, it is the best, fastest growing revenue growth since early 2022. So since I've owned this stock in the last year, these are the best numbers I've actually seen Google reported. And actually, when you dig into the numbers a little bit further, they're actually even better than the headline numbers. When you actually dig into the numbers, you'll see that the revenue growth of 13%. You'll see the operating margin increased to 27%. So their profitability has jumped massively. So on a forward basis now, this company is going to be traded even cheaper. And the benefit of the cost cutting and also the staff layoffs that we've seen is really benefiting them. And the other thing is, when you look at other income as well, that also had a massive swing. So when you look at the diluted EPS, for example, look at the improvement from Google this quarter. And this is what I mean. This is actually the best quarter I've seen Google do since I've actually owned the stock. And now you see that drive in profitability. You'll actually see that Google is now trading at 22 forward times earnings because of that growth in profitability and the EPS growth that we're seeing. So the profitability improvement is unbelievable. And as well as that, you've got the company growing back at really good rates. Google, one of the best, biggest moat in there, the AI drive that's going to come, the profit growth, the revenue growth, the balance sheet, one of the best balance sheets in the world. Now back at 22 times earnings, which is very good in my opinion. Now, something else that went back under the radar is Google Cloud. This was everyone talking about, oh, Google Cloud growth is slowing down. You look on the recent quarter, anything but that happened. It was very good. Now, also what was impressive is the Google Cloud profitability. Last year, this company was about break even, slightly loss making. Look at the Google Cloud drive to profitability. Insane. Now, this is the thing, is that they've just reached the point of cloud profitability. And this is the thing, is that when this gets bigger and bigger and bigger, the profit this is going to drive up is going to be very good. And then Google's going to be at a very cheap valuation as it grows the cloud profitability. And like I said, balance sheet wise, you're picking up one of the best balance sheets in the world. There's hardly any debt on this company. And this isn't the recent numbers. It might have changed a little bit. But the company sit on, because they are also actively buying back shares as well, by the way, which is obviously another amazing thing on top. But they sit on 119 billion of cash. Imagine buying a company that has a cash balance bigger than most companies' market cap sizes. That's absolutely insane. So when I look at Google, I think that this drop today is crazy. The stock should not have dropped off these earnings. These earnings are solid. They're the best earnings I've actually seen the company post since I actually have owned this stock. And when you look at the valuation, it's not even that bad of a valuation. 22 times forward earnings for this company, I think is very fair. So I've got to say, like, if I had to sell my shares or buy my shares right now, or buy more shares, I'd be a buyer of shares. Now, am I going to buy Google today on this drop? Probably not. As I said, lucky for me, I've got an average of about $100. So I don't really need to buy a big stake in Google. But if Google was to have a little bit of a dip here, maybe go on another 10-20% drop, I've got to say, I don't think I would have to think too long about buying more shares. I think you would see me a buyer of Google. So not enough of a dip today for me to buy, but I think it's a good opportunity if I didn't have some shares, and if it does go cheaper, I will be buying some shares up on Google. Now, Microsoft as well is doing pretty much nothing after hours, and when you look at their earnings as well, pretty good earnings from Microsoft. Their EPS came in at $2.93 versus the $2.78 expected. Revenue as well came in at $62 billion compared to the $61 billion expected. And same again with Microsoft. We saw them grow 17.6% year over year, which is once again one of the fastest growth quarters we've seen them do for a long time. Now, obviously, Microsoft is a little bit more expensive, trading at 39 times earnings compared to Google's 29 times earnings. But Microsoft obviously is a company that is seen as more of a diverse company, I guess, and has a bit more of a premium than Google. Now, same again, I've been a shareholder on Microsoft for around about 7 years now. So I have started buying shares in Microsoft when the stock was an $80 stock, believe it or not. It was a long time ago, and some of those shares that I have are up nearly 400%. I bought a few more shares since that time frame, but I've not bought Microsoft for probably 4 years now, but I still own my shares because it's one of those stocks that I think you can just buy and leave it to do its thing and hold it in the background, and that's what I've done with it. So I do own shares in Microsoft, but yeah, once again, you look at the numbers being absolutely amazing. You dig into some of the other parts of the business. Cloud, very impressive growth once again. Office still very strong. LinkedIn still doing very well. You look at the server products, Azure, the cloud service as well. I actually looked and saw Xbox content up at 61%. And I was like, that's a big jump. We hadn't seen that for a while. Then I realised they had made the acquisition of Activision, and I went, oh, that's why it's up so much. So you got to price that in when you do look at the growth that they have just put in. But same again, all around really good numbers from Microsoft, and once again, really good beats. But yeah, you look at the stock and it's not doing anything after hours. In fact, it's down a little bit. So I guess you've got these two stocks that I own that have brought out, solid earnings, good, you'd say 9 out of 10 earnings from both of them. And you look at them, but both doing nothing after hours. In fact, one's down and one's down massively. So why are these stocks doing this at the moment? Well, I think it ultimately comes to one thing. When you look at Google is up 53% in the last year, which is a very good year. I'm up 40% in Google shares. Microsoft, when you look at what they're up in the last year, year to date, it's up 10% alone. In the last year, it's up 64%. So these stocks have had a good rally. They have priced in a lot of growth. Microsoft is now trading at one of its historic highs at 39 times earnings. Google as well is back at its average kind of valuation. So I think that these numbers are good, and the only reason why these stocks are dropping is just because they've gone so high on the valuation, and I think there's a bit of it priced in. And when you zoom out and you look at the S&P's valuation right now, it's currently trading at 27 times earnings. This is historically one of the highest points it's traded at since its tech bubble, and also since 2008. This is and also the CV dip. This is one of the highest points the S&P is traded at on a valuation basis. And I think it's just one of those that a lot of these good earnings are priced into these stocks now. Now, I think Google's a little bit unlucky because I think it's getting punished because other stocks are a bit richly valued. You likes of Microsoft, for example. You likes of Apple, for example. So I think that we're just having a general cooling phase on an earnings, on a valuation basis. And I think Google's just a little bit unlucky to get punished more than Microsoft. So when I look at these drops, I personally won't panic about it because we've had a good run. And I think it's just having a bit of the financials are catching up to the valuation. However, saying that, if we see Google drop 5% and then that creates a downturn where the stock does drop maybe another 10-20%, then we actually might see a buying opportunity created in some of these stocks. And if that does happen, then I'd probably look to take advantage of it. So yeah, that's probably the reason why a lot of these stocks are not doing much after hours, even though they brought out fantastic earnings, even though they're some of the best companies to own in the world. I think we're just having a time frame where valuations are a little bit rich and we're just having a bit of the financials catching up to the actual valuation. So I would say it's nothing to worry about at the moment, and we'll see if there's a buying opportunity created. Hope you enjoyed the video anyway, guys. Hit that like button, and I'll see you in a bit.